welcome and hello again for Benjamin. So thanks for joining this panel on automation and AI in treasury operation. And we will talk about different solutions because you are, let's say, on one side with Jonathan more the bank connectivity, but Finologee is much more than that. And I am more a classic TMS provider having a huge range of solutions and different products within the TMSs for different type of customers, but also additional, let's say, modules. And Benjamin, again, I don't know if we need to introduce you again, but you are corporate treasurer and an active member of ATEL and board members, and so you are in charge of the, let's say, education program at ATEL. Thanks a lot for coming again. So maybe for the two of you, Viola and Jonathan, and let's start with Viola, could you just introduce briefly who you are, your role at the company, and give us a couple of words about ION?
Yeah, thank you. My name is Viola Hechl-Schmied. I am with ION for 15 years now. I came through 2 acquisitions actually, previously working for Ecofinance and Rival. ION has a broad set portfolio of TMS offerings that we have. In total, we all have 7 TMS products. And the strategy behind it is really that we can cater all your needs, whether you're a small company just coming off of the Excel spreadsheets that we have heard before, or you're a big enterprise and are at the end of, never really at the end of evolution, but rather at the top end, top tier. So we strive to grow with you. So if you want to start growing with us with a smaller TMS, along the way we can accompany you and give you the possibility to also transition between these TMSs according to your needs. One of the strengths of ION is also that we have several solutions in place that are available for all our TMSs, and one of those are our machine learning solutions, where I am the product owner of for the past 6 years, where we have different solutions available. We started back in 2019 with cash flow forecasting. We also have solutions for the bank account reconciliation process, outlier detection, and we are now also looking into the new field of Gen AI and AI agents and seek for solutions that are helpful for you as well. Thank you.
And Jonathan, could you introduce you and Finologee?
Yes, sure. Hello, everyone. So Jonathan Prince, one of the co-founders at Finologee. Finologee is a Luxembourg-based fintech, regtech company that we incorporated a bit more than 8 years ago. And we basically come from electronic payments background as we, together with my partners, we're managing the micropayments in Luxembourg and also in France. And then we built a mobile payment solution in Luxembourg, which is known as DigiCash, now Payconic, soon Wero. And so from there, we decided that we would help financial institutions, or at least assist financial institutions in tackling several pain points, mainly around KYC payments, obviously. And that was the latest platform that we launched 4 years ago in co-creation mode with an insurance company, which is Crédit Agricole Life Insurance, to help them basically have a bank single gateway to connect to all the custodian banks they are dealing with. And from there, we started expanding the functionalities, the features of the platform around data retrieval from these different banks, payments operations, obviously, but also some specific use cases in the fund industry first, and then expanding to Treasury. So basically, we have some features that allow cash concentration, for instance, or cash balancing, reinvestment, but it's not the core activity or the core features of the platform. We mainly partner with tools, external tools such as the one you're providing, or other additional tools that we act as enabler to help our clients become more efficient.
You pay on behalf, you use your Swift big code.
Absolutely. So we have our own big code. So we're considered as a supervised entity. So we have a bit code that we use, and our clients are piggybacking mainly on our bitcode to connect to the different custodian banks or the depository banks they work with. And we also have, as alternatives to Swift, eBix, host-to-host, whatever works with the bank to make sure that we can connect and exchange data. That's the idea.
Okay, thank you. So maybe a first question for you, Benjamin. So how is AI-driven decision-making changing the role of Treasury professional, and what tasks are seeing the greatest impact? How do you see?
So AI is here, right? Whether we like it or not, it's here. And you see, like today, there's no one panel we don't talk about AI. There's no one conference where we don't talk about AI. And not only Treasury, finance, like it's everywhere in the news. So it's there, and I think it's obviously is there to stay. But I think our valid reasons is because the potential production or productivity gains of AI are really too significant to ignore. In a few days, on 30th of November, if I'm correct, it's going to be the third year anniversary of ChatGPT. One platform amongst others.
Many.
That competes with generative AI, etc. But you see the adoption rate is still very, very limited for treasurers, including for treasurers. To use.
Very specific, but not, let's say, developing the whole potential of this.
Yeah, it's really, really limited. And I see there are, let's say, two main reasons in my mind that pops up. Is the first, data. We talked about data a lot here. So yes, first, like garbage in, garbage out, you have to have good data. But there's also, the second element is more the perplexity about AI. Each time we talk about AI, I'm sure we have a little bit of unease. And my take on this, and many of us here share the same, is that I do not believe AI will replace treasurers. Why? Because we've said in the previous panel, Treasury is about judgment, it's about critical thinking, it's about driving a project to the finish line, it's about having this transformation journey, facing others, and seeing your CFO poker face when you are proposing a new investment strategy or FX policy or whatever. So that's Treasury. Now, don't get me wrong, because we know AI is replacing tasks and activities. Yes, I believe that's very true. It's not in the future, it's right now, but I don't believe it's replacing a full role. So to your question, use cases that the one I've seen so far is more on reporting. And you have TMS that provide you, you have a chatbot, and instead of having to collate different reports from the TMS, you can say, hey, I don't know, I want to see all the bank accounts that had no activity in the last 6 months, because I want to do a review. Then it will give you a report like that. That can be very useful, collate information from different sources and having one. So all this reporting piece, that's going to go away, I'm pretty sure, all this gathering of data. Then the cash forecasting, we talk about cash forecasting a lot. What I've heard, I've not seen, but I've heard, the AI in cash forecasting, some cases can, for example, will retrieve the weather forecast for the companies in the tourism industry. Very interesting for them to know the weather forecast, and I will give them some scenario analysis on, no snow in the Alps this year, so maybe we're going to have some less cash flows for this winter. Real estate is going to connect to the news and understand, okay, there is a potential interest rate increase, decrease. So things like that I've heard, I've never seen, if it's in a TMS. Then another one would be fraud. We talked about this with Prosper, also with the document detection, and fraud detection can be used there as well. And then Viola will talk about it, but the bank reconciliation, also Jonathan will talk about the document to payment, collection automation, etc. So there are use cases, but now, as I said, very limited adoption. I'm from Belgium, and I did a bit of research, and I saw, okay, in Belgium, like in Europe, we have 99% of the companies are SMEs. And there was a survey in Belgium to those companies, so most companies, asking the AI utilization, and most, like 5% of them said they have one use case. And all the rest was more, AI is an exploration mode, we use it as a gadget. And my neighbor is hosting a student from Japan this year, and I had a conversation about AI, and he said, you know that in Japan, AI is, we study AI, how to use AI in primary school. So it sets the scene. For me, it's not a technological gap. Definitely not. Like, look, Tech Day, we're talking about AI all the time. Technology is there. For me, it's a cultural gap. I think we're too scared, this perplexity I was mentioning, to use this technology. And it's a pity because the potential is there. And we're sometimes too ashamed to say, I've used Copilot for this report. Or I've used Copilot to make a recommendation. It's not a bad thing. Just use it as a recommendation, not as a decision maker.
Yeah, it will be easier when we will have an official virtual assistant. But coming back and transition to you, Viola. So we always talk about AI, etc. It's interesting and a lot of technologies. But don't you think that first it should be automation, full automation and hyper automation when it comes to bank reconciliation? So have you seen concrete example of, let's say, added value that have improved the accuracy but also reduce the manual efforts of your customers?
Yeah, so especially the bank account reconciliation process, I believe, was not really the first process in Treasury that pops to mind when you think about machine learning, and maybe that's because it is already automated to some degree in the TMS most of the times. There are rules that you define and that you have to then maintain afterwards, but this is actually already the key pain point, I believe, is you have to define these rules and then you have to maintain them. So you have to understand your data, you have to understand what you want to do to come up with these scenarios for which you then define the rules. Once they are in place, then you only then identify the gaps that you were not thinking about, and then you have two options, I believe. Either you go in and handle those rules that you define, and maybe they are so complex that you don't want to do that, and then the second option is you live with it, and then you have this daily manual process of like doing the job that actually the rules were supposed to do. So don't get me wrong, I truly do believe that the TMS are well equipped for that process, and the accuracy rate is typically rather high. I believe that, for instance, for tagging bank statement items, accuracy rates are up to 90–95%. So this is not bad. But still, there is this manual task left, and it comes at a cost at times to achieve this high accuracy by a maze of rules, because you add, you find that there is one missing, you add another rule, and then it's unmaintainable at one point. Or if you have to, had the discussion years back with a customer, and they said, well, now they have a new counterpart, and they now created the rules, and they did the testing rounds, and it took them months to get to the point to like get the rules live to work with it. So we thought about that, and ION's main goal is really to drive automation, and we thought that actually that's a good way for AI, or you'd maybe rather say classical machine learning algorithms that you can apply here, because you have all this data in the system that you can train an algorithm on, and you don't only have the data that was correctly actually identified by the rules, but you also have the data that the team manually tagged. And so you have a great database where machine learning can then train on. And we have seen with customers that they were able to increase accuracy by applying machine learning only to those transactions that the rules did not catch, from 90–95% up to really 99%, nearly 100%. And that's like going in a hybrid approach, where you still have your rules that you really worked hard on defining, so you don't want to throw it away already, but applying machine learning on those that the rules missed. And then over time, what you can do still is you can use machine learning to double check whether the rules are actually still correct, because sometimes you get into a routine that you tend to override what the rules did, and you just never correct it properly. Yeah, and then you can double check whether your rules actually work with machine learning, and then over time you can replace them all together, so that you don't have all this maintenance overload. And the same goes not for the tagging, but also then for the actual reconciliation with the forecast transactions in the system. That's the same story, where it is often difficult to create the rules, especially when you get very complex structures, not these straightforward one-to-one structures, but when foreign exchange translations come into place, for instance, where you then suddenly have the variations in the amounts that are higher than you anticipated.
Discrepancy that make...
Or actually complex structures like one-to-many or many-to-many. Yeah. And there we also see that that machine learning can be a good addition in the first place, and then potentially over time actually again replace rules. So it can help drive automation still.
It's a concrete example of what it could, let's say, offer or enhance. So coming back to you, Jonathan, so bank connectivity platforms are evolving also. What new automation opportunities are emerging for treasurers managing multi-bank relationship, and some could have a lot of bank relationship. I'm sure that Benjamin could talk about the number of banks and accounts. So do you see these new technologies really potentially improving the situation? Because we have also a lot of merchants and they have a lot of collections, so high volume. So you have also insurance company in your portfolio, etc. So where the technology could really improve this evolution?
I believe you've got to look at it not only through the automation angle, but also coupling it with the AI aspect. So there are really two steps here. First, there's what modern connectivity changes, and then what AI lets you build on top of it. So basically, we've been hearing all afternoon some examples. We're probably just at the beginning with AI, to be honest. It's true also what Benjamin was saying. It's slow adoption yet, at least for very specific use cases. It's a high-speed adoption, but the full potential hasn't been reached, obviously. So on the connectivity side. So platforms such as the one we're providing, the biggest advantage, it gives one rule book for across all your banks you're managing. So basically, you were speaking of, so we have clients, but not only in the financial industry, we also serve some corporates that can work with tens, hundreds of banks, and it becomes very cumbersome to manage that. So if you can apply a rule book to the group of banks instead of having hubs, specific hubs, you can then define some common targets, some thresholds, some timings, approvals that apply across all these financial entities. And I think that what Benjamin was saying, what is key is that the Treasury team keeps full control of that. They define these rules, and they keep also the ownership of the parameters and the exceptions that they want to apply, which is key. And once the orchestration, to use what Angela was saying earlier on, layer is in place, the platforms becomes really calibrable, and you have your workflows that are defined, and it's just a set of rules that really operate without having to think about them really. And then you have investment sweeps to MMF. So we have done that with a client which is more an asset servicer serving asset managers and so on. They want to do cash concentration, and from there define some specific rules of reinvestment, and you can set these rules, and once they're approved and they're based on the authentication, a strong authentication, you get the approval, you sign it, so you've got a full audit trail around that. That is key. Then these rules are in place. Then you come into the AI dimension, where there are three practical ways we see that AI can play a key role. So I took some notes from what was said earlier on. So conversational and intelligent payment operations, I heard. But I think if you translate that in something more practical, is show me all payments over 100,000 euros awaiting signature. That's something that you can generate automatically. Or which customers are systematically paying late in France. That's a random choice of country.
Yeah.
Right?
Of course.
But that's how you could use AI.
Yeah. And it works,
Benjamin introduced it, document-to-payment automation and collections. That's clearly also a way of using AI, how to, and especially when it's high-volume payables and receivables. So AI-powered document processing, that takes a clear role and advantage. So you can draft payments and counterparties automatically, and then the predictive and optimized liquidity moves you mentioned, and it was mentioned several times here. So propose cash concentration sweeps and auto-funding moves and so on. So the key is that connectivity provides, I would say, the complete real-time picture. That's one aspect across all the banks you're working with. And AI and automation make that picture more actionable and at scale. That's the key element, I would say.
Okay. And Viola, a question for you. So are there best practices for starting RPAs? Because we should also talk about RPAs and robotics or AI initiative in Treasury, especially for organization, and it's frequently the case with limited human resources or money, a budget to invest, or limited experience.
Maybe also to get to what Benjamin said in the beginning, Treasury is maybe a slow adopter here, and we have seen that actually in the past the Treasury is more conservative and they don't really trust new technology. And here's a prime example where I believe that if you want to introduce machine learning into your company, into your Treasury group, first of all, I believe you have to get them on board. Mostly it is actually an initiative that is driven from top down, CFO, etc. And then you have to get the team on board, and you have to get gain trust into what the algorithms are doing for you. And the best way to do that is by running these things in parallel. So that also means that you have to invest a little time, but there are solutions out there like treasury management solutions that offer machine learning in the solution itself, where you can then easily integrate it into the existing process, so that you, for instance, for cash forecasting, you still plan manually, but on the sidelines you have the algorithm, you have machine learning also predict, and then you over time compare. Is it as I expected? Can I trust it? Is it reliable? Can I switch over? The same goes for the reconciliation process, where we have said you can always check what it is doing. Is it the right thing? Is it what I was expecting? And there's always the possibility to override what it did, right? So it's not as if you had to live with it, and that gains trust over time. And I don't think that you need to have the machine learning experts in your team, but be open-minded. A little bit of I believe the best thing is if you know your own process, you know your data. As Benjamin also said, the data is also very important, that you know maybe of events that might dilute the outcome of the algorithm, because it was a rare event, that you are aware of that and can clean the data beforehand. That's important. These things are important, and that you monitor it. That would be my suggestion. And we have seen also in projects that is actually the best approach. So not forcing it upon the team, but guiding them, showing them what it can do, and also showing them the benefit of then, hey, see, if it is working, you don't have to do that anymore. You don't have to come in every month and make the same forecast again that you likely don't want to do, or you don't have to tag the same transaction again and again. It can do that for you, and you can focus on more important work.
Yeah.
I think, and maybe add something there. So it doesn't have to be sophisticated like AI, or even before. Let's walk before we run, like automation. You can automate without AI. There was a use case very quickly. We had in another company, we were having late payments. We were paying our suppliers late. A cash-rich company. So something is wrong in the process, obviously. And so the idea was to digitize the data from invoices, so we use OCR, and then we invested, what, 2,000-3,000 euros in a license for Automation Anywhere using robotic process automation, RPA, 2 days of training for someone that knew a little bit of macros. That's it. And then he coded all those manual tasks that we were doing in the RP to book the invoice, post the invoice. So all of this then was digitized from OCR and then going straight into this RPA process every day. And then we ended up not only paying them on time, but earlier. And that was when the rates were below zero, so we were able to apply a supplier discount. And so we're getting quite decent returns, and for 2,000-3,000 euros of investment. So we're not talking about something super complicated or heavy investment.
I agree.
Okay. Okay, because we are, let's say, running out of time, so it's a very interesting session, so we could certainly talk about that for longer, but at least a final takeaway for we, Benjamin, so we are in charge of also educating and let's say training our members, so it's something that we should consider. But I like the takeaway, so go step by step. Count on your supplier to give you some support. Don't have the impression that okay, if you don't have
we are right outside, you can come by any time.
Yeah, exactly, so you cannot miss you. But again, if you have any questions, so go to the Finologee or to Ian booth and address question, and I'm sure that Jonathan, Viola and Benjamin will stay longer, so if you have any question, do not hesitate to address the question directly to them. So thanks a lot for your insightful comments. I think it's time for a deserved coffee break, so see you in 30 minutes for the last round.